Today we'll be discussing about impairment of asset. It's under past 36, so we are part one of series of discussions in impairment. Impairment of assets applies to assets such as property, plant, equipment, investment property measured under the cost model, intangible assets, investments in associates, joint ventures, and subsidiaries. You have a rule where if the carrying amount is equal to or less than the recoverable amount, the asset is not impaired. While if the carrying amount is greater than the recoverable amount, the asset is said to be impaired. The excess shall be written off as impairment loss. In other words, if the recoverable amount is lesser than its book value, the asset is said to be impaired. Okay, let's discuss those terminologies used. The amount at which an asset is recognized after deducting any accumulated impairment losses thereon. Carrying amount is also known as the book value. Recoverable amount is the amount expected to be recovered from the sale or use of an asset. It is the higher of an asset's fair value less cost of disposal and value in use. In other words, if these two are given, we get the higher value, and that's the recoverable amount. Then we have fair value. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Cost of disposal are incremental costs directly attributable to the disposal cost of an asset or cash generating unit, excluding finance cost and income tax expense. So this cash generating unit will be discussed in the next part of impairment series. Value in use. Value in use is the present value of the future cash flows expected to be derived from an asset or cash generating unit. Don't worry guys, all of these definitions will be shown again in the problem so that you will understand these terminologies better. Let's apply. On December 31, 2020, COVID company believed that its building is impaired. So you have the following data: the cost of the building, depreciation, accumulated depreciation, fair value less cost of disposal, value in use. The question is, how much impairment loss should be recorded, if any? So first, we compare the fair value less cost of disposal and the value in use. So the greater amount is of these two is the fair value less cost of disposal, which is 800. So that's our recoverable amount. Based on our definition, the recoverable amount is the higher of these two. The higher of fair value less cost of disposal and value in use. So you compare the two, the higher is the recoverable amount. Then building, the cost of the building less accumulated depreciation of 400,000. So the carrying amount is 800,000, or the book value is 800,000. So we compare these two. So the recoverable amount is equal to the carrying amount. So based on the rule, if the carrying amount is equal to or less than the recoverable amount, the asset is not impaired, since recoverable and carrying is equal. Problem. On December 31, 2020, COVID company has the following information, but this time the asset was previously revalued. That's why you have this revaluation surplus of 50,000, an OCI account. The question is, how much impairment loss should be recorded, if any? Again, our first step is to compare these two to identify which is higher, and that's our recoverable amount. Next, we compute the carrying amount or the book value. So cost of the building less accumulated depreciation, your carrying amount is 800,000. So recoverable amount less carrying amount. So the total reduction in the carrying amount should be 100,000. But you have to offset first the revaluation surplus, which is 50,000. So the net amount to be charged to impairment loss is only 50,000. To journalize this, okay, we have to credit accumulated depreciation for the excess of 100,000, meaning to bring down the carrying amount to the recoverable amount. So we have to credit 100,000 accumulated depreciation. Then we take out this. We have to recognize the impairment, the net impairment loss, and we have to take out the revaluation surplus. So the final journal entry is debit to revaluation surplus, impairment loss 50, and accumulated depreciation 100,000. Next problem. Virus company determined that due to obsolescence and equipment with an original cost of 5 million, accumulated depreciation given there, and the remaining life of the equipment was determined to be 2 years. So you have to compute again impairment loss. So given the problem, original cost 5 million, accumulated depreciation 25, recoverable amount 1,700,000. In this case, recoverable amount is already given, so we don't have to compare. So let's solve for the impairment loss. So cost of 5 million, accumulated depreciation, so you have 2.5, so we have 2.5 also carrying amount versus the recoverable amount of 1.7. So our impairment loss is 800,000. So our journal entry is debit impairment loss and credit accumulated depreciation. So every time we recognize impairment loss, it is always credited to accumulated depreciation. Okay, another issue here that we have to consider is that the remaining life of the equipment after this impairment was determined to be only 2 years. So that means the depreciation to be recognized for this year is 1,700,000 divided by 2. So that's the recoverable amount divided by the remaining useful life. So that's 850,000. So for 2020, the cost of the asset is 5 million. Then you have to deduct the accumulated depreciation for 150 is coming from the 2.5 2019 plus the impairment loss we recognize plus this year's depreciation. So total accumulated depreciation is 4,150,000. So your carrying amount as of December 31 is 850,000. Next issue is the computation of value in use. So on December 31, 2020, vaccine company identified that its carrying equipment with a carrying amount of this has this fair value, this cost to sell, 300,000, and you have the following forecast is used in estimating the value in use. Okay, take note that the discount rate is 10%. So you have to compute the value in use as well as the impairment loss. Okay, our solution here is, let's go back here, future cash flow 350, future cash outflow 150. So our net cash flow here is inflow less outflow equals 200,000. So that means we have to determine first the net cash flows for each period. So that's for 2020. For 2020, so 2021, cash inflow less outflow, net cash flow. Then we have 2022. So we now have the net cash flows for these years. Okay, 270 and 110. So we will be using this net cash flows. These net cash flows will be multiplied by the present value of 1, which is our discount rate this time is 10%. Remember that, 10%. So it's 1.10% to the negative 1 for one period. And that is 0.09091. Therefore, the present value for 2020 is 1818. For 2021, present value here is present value of 1 at 10% for 2 periods. So 70, the net cash flows, times present value is this. Present value factor is this present value. And 2022, 110 net cash flow, present value factor, 6 digits here. So the present value is this. So the total value in use is 322,314.05. So we have to round it off. Okay, so you now have your value in use of 322,000. Okay, given in the problem that the fair value less cost of disposal is 300,000. Therefore, we have to compare these two. So this is given in the problem. We just computed this value in use by getting the net cash flows, multiply it with the present value factors to get this total. Then we have to compare these two. So we get the value in use as this is the higher value. Therefore, the value in use, which is 322, is our recoverable amount. Okay, our carrying amount is 500,000. Just now we computed recoverable amount of 322,314. This time we rounded off to whole number versus our carrying amount just now, 500,000. So our impairment loss is 177,686. Thank you very much for watching our videos.